Owner is called the consignor and the agent is called consignee. The agreement between the consignor and the consignee we called as consignment account. There are three types of commission. One is called ordinary commission. Number two, bill credit commission. Number three, overriding commission. Whatever the difference comes, if the credit side is more than the debit side, then it's a profit. If the debit side is more than the credit side, it's a loss. Hello, my dear student. I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Financial Accounting 1, First Semester, Unit 3, Session 1, in favor of Accounting for Consignment Transaction. So the heading is Accounting for Consignment Transaction. I am going to explain what you mean by consignment. Consignment is a system of sending the goods to consignee for sale of goods to the customer on behalf of consignor for the benefit of commission. In consignment, there are two parties. If I want to sell the goods in other place, what the owner will do, he will appoint an agent who can sell the goods in the name of the owner at the risk of the owner. The man who sends the goods is called consignor. Who sells the goods on behalf of the owner is called consignee. In consignment, there are two parties. One is the owner and is the agent. Owner is called the consignor and the agent is called consignee. The agreement between the consignor and the consignee we called as consignment account. What is consignment account? It is an agreement between the owner and the agent. Owner is called principal, whereas other man is who is selling the goods is called agent. The transaction, the agreement between the owner and the agent is called consignment account. Owner is called consignor and the agent is called consignee. Here, consignment is a system of sending the goods to consignee for sale of goods to the customer on behalf of consignor for the benefit of commission. Who will get the commission? The consignee will get the commission. Who will sell the goods on behalf of the consignor. Consignor, the person who sends the goods to the agent to be sold by him on commission basis or consign. The owner is called the consignor. Consignee, the person to whom the goods are sent for sale on commission basis is called consignee. Consignee is the agent who will sell the goods on behalf of the consignor at the risk of the consignor for a commission. Consignee is an agent who will sell the goods on behalf of the consignor at the risk of the consignor for some benefit. That benefit we call as commission. We'll move on. Commission. Commission is consideration to the agent for sale of goods on behalf of the owner. It is nothing but a compensation payable to agent who will sell the goods on behalf of the consignor. The consignee gets three types of commission. This is important. Three types. Three types of commission. One is called ordinary commission. Number one, ordinary commission. Number two, bill credit commission. D-E-L-C-R-E-D-E-R. Number three, overriding commission. So there are three types of commission. One is called ordinary commission. Number two, bill credit commission. Number three, overriding commission. Which are the three types are? One is ordinary commission. Number two, bill credit commission. Number three, overriding commission. Come back here. Commission is a consideration to the agent for sale of goods. The consignee gets 3 types of commission. One is called regular commission or ordinary commission. Ordinary commission is a type of commission given by the consignor to the consignee for selling of goods on behalf of the consignor. It's a regular commission. Who will sell the goods? The agent will sell the goods on behalf of the consignor at the risk of the consignor for a consideration. The consideration is called commission. It is given both on cash and credit sale. It may be cash sale or a credit sale. He will get the commission. Then, bill credit commission. It's a type of commission paid by consignor for increasing the sale and to encourage a consignee to make credit sale so that the consignor provides an additional commission, generally known as bill credit commission. It's a payable by consignor to consignee to increase the sale. He will get the extra commission. Who will get the extra commission? The consignee will get an extra commission. The sale should be pulled out so that there will be more sale. But only thing here you understand, when he can make the cash sale also, he can make the credit sale also. When he make the credit sale, if there is a loss called bad debt, that loss should be borne by consignee, not by consignor. If this commission is not paid, whatever the loss, like when he make the sale in the form of credit, if there is any loss like bad debt, that should be met by consignor. But when bill credit commission is paid, if there is any loss like bad debt, that should be met by consignee, not by consignor. Though it is an extra commission, but this point is most important. Previously, any loss arises, that should be met by consignor. When bill credit commission is paid, if there is any loss like bad debt, that should be met by consignee, not by consignor. Then, overriding commission. It is an extra commission allowed by consignor to the consignee to promote the sale at higher price than the specified or to encourage the consignee to put hard work introducing new product in the market. It is more than overriding, maybe more than regular commission and bill credit commission, so that when this commission is payable to him, so that he can introduce new product into the business and take the risk to push the more sale so that the consignor gets the more profit, and also he is also benefited by getting the more commission. How the transaction takes place. In the books of consignor, you are going to write to goods sent on consignment account. Invoice price means cost price plus profit. If the goods sent on invoice price, you have to write goods sent on consignment account, then to bank account, expenses of the consignor, to consignee account, here, to consignee account, expenses of consignee. If the invoice price is not sent, then goods sent on consignment only you can write. Invoice price means cost price plus profit. I will explain this. Then, to consignee account, commission of consignee. Come back to credit side. By consignee account, whatever the sale made by consignee, by abnormal loss, I will explain this. By closing stock means unsold. Unsold stock lies with the consignee. Then, to consignee account commission, to loading a stock reserve on closing stock, I will explain this. Then, by loading stock reserve or goods side, whatever the difference comes, if the credit side is more than the debit side, then it's a profit. If the debit side is more than the credit side, it's a loss. I will give one explanation. Invoice price cost plus profit. I will explain. Consignee account, when you make the sale, the entire amount lies with the consignee. What he will do now, he will deduct his advance in the form of check. If may receive in the form of a bill, it's called bills receivable. Then, whatever the expenses met by him, on behalf of the consignor that expenditure. By consignment account, whatever the commission he has going to receive, that will be deducted. So from this figure, he will deduct his expenditure. Whatever the difference comes, the difference will be sent by consignee to consignor in the form of a check. When he make the sale, the entire sale amount lies with the consignee. What he will do now? He will inform, I deducted my advance, I deducted my expenses, I deducted my commission. The difference I am sending in the form of check. I will repeat. Who says like consignee to consignor? This is the total sale amount lies with me, but I am now sending the total amount. What I am doing now? I deduct my advance. It may be check or beer. I deduct my expenses. I deduct my commission. The balance I have sent in the form of a check. If you want, we can check the entire balances. If there is a abnormal, if there is any accident, you have to calculate abnormal loss. Total loss occurred here. How much we received from the insurance company, you have to write. The difference is called profit and loss account. When the goods are sent on consignment account, which includes the invoice paid, you have to write consignment account, stock reserve. I will explain this. Stock reserve to trading account, whatever the difference comes. Then calculation of abnormal loss. Goods lost in value, whatever the accident takes place in value, add expense, non-recurring expense. In consignment account, there are two types of expenditure. One is called recurring expenses, another called non-recurring expenses. Expenses which are directly connected to goods is called non-recurring. Example, it may be loading, it may be unloading, it may be packing, it's a carriage on purchases, it's a octroi. All these items, it may be loading, it may be unloading, it may be packing, it may be carriage, or it may be carriage on purchases, it may be insurance in transit, it may be octroi, it may be freight. So all these are called non-recurring expense should be taken into consideration. Recurring expenses like salary, rent, printing and stationery, postage should not be taken. Which are non-recurring expenses are loading, unloading, packing, freight, insurance, then octroi. Direct expenditure should be taken into consideration like salary, rent, printing and stationery, postage should not be considered. This is when the goods lost, only consignor expenditure should be considered. Then whatever the amount recovered from insurance company, that should be deducted. The difference is called abnormal loss. This is the cost of goods lost plus expenses of the consignor should be added. This is called total loss. Then whatever the amount recovered from insurance company should be deducted. Difference is abnormal loss. Then working out now to calculation of closing stock. Unsold stock. Value of stock unsold. Add non-recurring expense of the consignor. Add non-recurring expense of consignee. This is value of closing stock. In abnormal loss, we won't take the consignee expenditure. Here we have to take consignor expenditure also, consignee expenditure also, only non-recurring. Recurring expense should not be taken. What is non-recurring? I told you so many times. One is loading, another is unloading, packing charges, carriage on purchase, carriage on insurance, octroi, and freight charges should be taken into consideration. We have to take the expenditure of the consignor, expenditure of the consignee, this is the value of the closing stock. Then, non-recurring expenditure, loading charges, carriage on purchase, octroi, dock dues, insurance on goods, unloading charge. These are the expenditures should be considered. So I told one word called invoice. This is cost plus profit. I'll give an example. Consignment account. goods sent. Assume you are sending 1000 kgs at rupees 130. The real cost is 100, sending us 130 invoice price. It includes the profit of 30 rupees. 13 ones are 13, followed by 40. 1000. 13 ones are 13, followed by 30. 1,30,000. Now, so how much extra is there? 30. You have to write here stock reserve. How much extra? 30. What's the value of the goods sent? 1000. 1000 into 30. 3 ones are 3, followed by 40. 30,000. This is how to do when the invoice price is given. Goods sent on consignment account, 1000 kgs we are sending. Real cost is 100. You are sending at 130. This is your invoice price. How much more is there? 30. 30 you have to write on how much goods? 1000. You have to write the stock reserve. Then closing stock, unsold. By chance, out of 1000 kgs, only 900 kgs has been sold. The leftover is 100 kg. 100 kg has been left over. And the value of closing stock is 4 or something value. Closing stock for 100 kg. Now, you send the goods at 100 kg at some value at invoice price. So, what we have to, we value that is the value of the consignment account, stock plus proportion expense of the consignor plus the proportion expense of the consignee. The total value will come here. Here stock reserve on closing stock. How many kgs? 100 kg. Extra amount 30 rupees. This is unsold stock reserve. 1000 kgs into that, 100 into 30. 3 ones are followed by 4. 3,000. Goods sent, stock reserve. Closing stock, stock reserve. How do you write? Goods sent, stock reserve. Closing stock, stock reserve. I will repeat. Goods sent, stock reserve. Closing stock, stock reserve. Goods sent, stock reserve. Closing stock, stock reserve. This you have to do when the invoice price is given. How to write? Goods sent, how much extra? 30. By stock reserve on 1000 kgs. How many kgs left over? 100. So closing stock, 2 stock reserve, 100. How much extra money? 30. 30,000. 1 into 3 followed by 30. 3,000 you have to show. This is stock reserve. This is stock reserve. Goods sent, stock reserve. Closing stock, stock reserve. Hope you understand. This amount should be taken into consideration. Then here, postage, printing, salary, general expenses, should not be considered. Should not be considered. Postage, printing, salary, general expense should not be considered. These expenditures should be considered while valuation of abnormal loss and closing stock. Hope you understand. In consignment, there are 2 parties. One is the consignor and the consignee. The agreement between the consignor and the consignee we call as consignment account. Consignor is the owner. Consignee is the agent. Consignee will sell the goods on behalf of the consignor at the risk of the consignor. Hope you understand. We'll have some more problem on consignment in the next session. Till then, goodbye. Meet in the next session.